And it really, this exam, I just got to say, as I've been recording it more and more, it's just talking about injury and divorce and death and just this regulation exam out of everything. It's just so heartless, right? Just taxation of all these horrible things. I just stay strong, all of you out there. We will make it through this together, and I'll try to keep a chipper, upbeat personality throughout it all. Let's dive more into FICA. Well, FICA, this stands for the Federal Insurance Contributions Act. I don't really need to memorize that, but just FYI. The big thing to know here is that it consists of Social Security and Medicare. So when you contribute to FICA, it goes toward both of these. These programs, they're going to provide benefits for retirees, the disabled, and their dependents. That's one thing we'll see is if the person who was receiving the benefits passes away, well, those benefits may go to their dependents. This tax is going to be levied on earned income, such as wages, salaries, and self-employment income. We'll also see a little bit more about that later on. Full-time and part-time employees must participate in FICA, and employers are responsible for withholding the appropriate FICA tax amounts from employees' paychecks and submitting the withheld taxes to the government. So it is the employer's responsibility to withhold that. It's not like automatically somehow the government comes in and sticks their hands in and takes part of your paycheck and takes it. No, that FICA deduction you see is taken by the employer. Just like if you see sales tax when you buy something on your receipt, that money is withheld specifically by the company and then is remitted, given to the government because of that sale. Employers are also responsible for paying an equal share of FICA taxes. You see that is on both parts. So one thing I would know as we see more and more of these regulations and programs is who is paying this. In this case, it's both parties. Talking a little bit more, we got some examples, some situations. Who does this apply to? Well, Social Security benefits will be used in the following 4 instances, which each have examples of eligible recipients. First off, we are going to see those with disabilities receiving Social Security benefits. We have an individual who has been working for several years, suffers a severe accident, resulting in long-term disability that prevents them from working. Now, this is independent of workers' comp. Maybe this person gets workers' comp as well, but we're not really worrying about workers' comp right now. This is like someone could receive both. They apply for Social Security disability insurance and after meeting the requirements, receive monthly benefits to help support them financially during their period of disability. So again, like specifically, could you see both of these, workers' comp and Social Security benefits for this? Yeah, exactly. Just make sure you know this. This also includes disabled children. So someone born with some sort of effect on them that makes them disabled from birth, they are going to qualify for this as well. Medicare payments, not Medicaid. So Medicaid, if you see that, not really that you see that on the exam, but if you were confused and you're like, wait, where's Medicaid? That's a state-run program, so that's just the difference. Medicare is federal, Medicaid is state. We've got a 67-year-old retiree that enrolls in Medicare, the federal health insurance program for people age 65 and older. Let's make sure you know that 65 and older. They use their Medicare coverage to help pay for doctor's visits, hospital stays, prescription meds, and other medical services, which reduces their out-of-pocket healthcare costs, like extra health insurance as you get old. So first, we've got people with disabilities. Then we've got the elderly. Now we've got old age and survivor's insurance. In this case, we've got a retired worker who is paid into Social Security. So again, kind of think of it like a big pot of money the government's holding. You have this money withheld through FICA, goes into a big pot. Now, I made the joke earlier about hopefully there'll be enough money when it's my time to retire and your time to retire. There have just been talks throughout the years that there won't be enough money, but hey, I actually don't know. I haven't kept up with that much recently, but let's just hope and pray that there will be enough money to support us when we all retire. So these workers have paid into Social Security throughout their career. They start receiving retirement benefits upon reaching their full retirement age, which varies depending on the year they were born. This is a hot topic, right? Definitely a hot topic. What's the retirement age? It makes sense to raise the retirement age if someone, if the government wants to save money, because then they don't have to pay out benefits to those people until they retire, which is at a later age. But you don't need to know what those are going to be. In another example here, a widowed spouse whose partner has contributed to Social Security receives survivor benefits to help them financially after their partner's death. Now, yeah, like both spouses could work, but in this example, let's say we've got a spouse that worked their whole life and then someone who hasn't. Well, the one who did not work would still receive the benefits of the person who did work. Those benefits are not going to just be absolutely thrown to the wayside and wasted. They're going to be given to the widowed spouse. Lastly, here we've got supplemental security income. We've got a 55-year-old individual with severe disability, has never been able to work, and has limited income and resources. They apply for SSI, supplemental security income, a needs-based program designed to help the aged, blind, and disabled people with little to no income. Upon meeting the eligibility criteria, they receive monthly SSI benefits to help pay for basic needs such as food, clothing, and shelter. You can see there's a little overlap between all of these four, and that's fine. It's not like you need to know about these distinctly. It's just that you need to know, is someone going to be eligible for Social Security under FICA? Let's keep moving along, powering through. Next up, we're going to talk about how FICA taxes are applied to gross earned income up to certain limits. We are going to have an annually changing amount, which will be included in the resources that you'll see with this lesson. For employees, the FICA tax rates are as follows. So these don't change. We got 6.2% on gross wages, but this is going to be up to the certain amount. It's generally going to be a little bit above $100,000, somewhere around there, but that will be provided to you as this does change year to year. We've got Medicare. This is going to be a 1.45% tax on all gross wages with no wage limit. So this is going to be applied. You make $50,000, it'll be 1.45% times $50,000, same here. Then we've got the additional Medicare tax. Now, if an employee's adjusted gross income is over $200,000 for single or 250 married filing jointly, an additional 0.9% Medicare tax is applied to the entire gross wages. This is just additionally make extra money. You're going to contribute a little bit more to Medicare. Next up, for self-employed individuals, so you work for yourself, whether you own your own company, it's a small company, a big company, you have employees, but either way you work for yourself. You're not just getting a W-2 when you work for someone and they take out the FICA. What is going to happen here? Well, FICA taxes are applied to net profits if they exceed $400. Self-employed individuals, these people are going to be responsible for paying both the employee and employer portions, right? Because you own your own company, but you are considered an employee and an employer of yourself and that company. Which is often referred to as the self-employment tax. We obviously see self-employment tax all the way as far back as our individual income tax lessons in the beginning of the course. Employers can deduct their share of FICA taxes as an ordinary business expense, which is going to reduce their taxable income. Makes sense. Money that they never saw themselves. If an employer decides to pay the employee portion of FICA as well, so we're back to thinking about employers, normal employers, W-2, you work for your job. So if your employer decides to pay your portion as well, this portion can be deducted as an additional compensation that is includable in the employee's taxable income. So basically what this is saying is, and I can't say I've experienced this. I've worked for companies that would just normally do the FICA withholding. They withhold a portion of your income, but maybe this has happened. Maybe you've experienced this. So instead of you making $50,000 and, they withhold X amount, you just get your full $50,000 and they're going to basically say, okay, well, that portion was part of your compensation and they're paying that on your behalf. Now, additionally, if the employer fails to withhold the employee's portion, the employer has a right to be reimbursed by the employees for the employee share. So it's kind of just saying, hey, you get a job, you're going to owe FICA and Medicare and all this. It's something, they don't teach us in school, right? We could complain all we want about how they teach us the Pythagorean theorem and all these, sorry if I call them useless things, but they don't teach us stuff that literally everyone in this country is going to have to know when we get older, regardless if you are in tax or accounting at all. Anyway, that is one of my many rants for the day. If the employer fails to supply tax identification numbers for its employees or make timely deposits, the employer will be liable for penalties. Now, keep in mind these penalties are based on the failure to pay the tax, not the failure to collect the tax from the employees. So we see, what is the whole gist? What's the importance of what's going on here? It's that it's up to the employer to get that money to the government. It has nothing to do with withholding it from the employees. Theoretically, can you pay it on the employee's behalf for 5 years, and then after 5 years demand it from the employee? In theory, from what we need to know for the exam, yes. Maybe there's other rules for that, but that's way beyond our scope and not something I'm interested in at all. So that's just something to know. It is the employer's job to get that money to the government. That's what they'll be penalized on if they don't do that. It's not about withholding or collecting it from the employees. So miscellaneous FICA information here. We see that total wages. We talked about total wages. I mentioned how we'd see this a little bit more later on. These are the base amount with which we calculate both the Social Security tax and the Medicare tax. As such, it's going to be important here to understand the types of payments that are considered wages. Nothing too wild here, but we're going to see salaries, bonuses, contingent fees. Any of these are going to be considered wages. We've also got substitutes for monetary compensation, such as property given to an employee. So, for example, if a car was given to an employee as a productivity award, this is going to be considered wages at the fair market value of the car. I mean, you could also think about how this ties into gross income, all those lessons all the way back in the beginning. It's pretty much consistent. It's not like FICA considers this wages when gross income rules don't. Now we've got the following items that would not be considered wages. Reimbursed travel expenses. Well, they're just reimbursed expenses, so just paying you back for that. And then dividends, interest income, capital gains. These are not wages. Obviously, this is passive income dealing with investments in stocks, bonds, all of that. All right, let's take a look at an example here for FICA. Well, let's assume an employee, John, earns $75,000 annually in gross wages, and John is single. Well, his FICA tax would be calculated as follows. We see the $75,000 times the 6.2 that we know. We see the 75,000 times the 1.45 from the Medicare tax. So here we've got portion A, we've got portion B. John's AGI is not over 200,000, so we do not owe an additional Medicare tax. Your total liability would be both of these portions for a total of $5,737.50. His employer would also be responsible for paying an equal amount of FICA taxes on John's behalf. So just keep in mind your employer, whatever you're paying, they're paying as well. You are more expensive than your salary. If they pay you $75,000, you are more expensive to pay than you think, just in the salary. I'm not trying to say, oh, you should go over and thank your employer. Just something for you to know if you weren't aware before. The rationale for FICA, this is going to be to provide a stable funding source for Social Security and Medicare programs, which are essential components of the U.S. social safety net. By imposing the tax on both people, the employees and employers, FICA is going to help to ensure that these programs remain solvent. Hopefully they stay solvent throughout the years if they don't give too many benefits, and can provide benefits to those who need them, such as retirees, disabled individuals, and their dependents. Very good. Very nice. Let's keep rolling along. Nice recap here on FICA. Just going to leave this here if you want to take a look. Nothing that we hadn't seen before, but just a reminder, make sure you have these points down. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.